Hello, everybody. Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another 2-minute drill, Lessons in Valuation, subscriber request series. Now, these are videos that subscribers have requested to see, and that's why I'm doing. I'm not necessarily recommending these stocks. These are what subscribers asked me to look at. These are going to be very high-level videos that just give you a little bit of perspective on whether you should be spending more time researching them or not. But all of these should be researched before invested in. So today, we're going to look at an interesting company, AOS Smith. Now, the company's basically, the sub-industry category is called building products, but they're kind of specialized in water products and things like water heaters and so on. And with FastGraphs, you can always go into the external links, and then in the external links, go right into the company's corporate website, and you can learn more about the company. So that's one thing I would recommend that you do. But let's look at this company from a by the numbers perspective. Number one is looking at it through the recession of '08 and then through COVID, you can see that it's been generally a pretty good growth company. It's averaged 14.61%. That's a growth from this point to this point. All right, but we've had some periods like pre-COVID and during COVID where the earnings dropped. We had kind of a flat period in 2024 and then expected to be pretty flat in this year, 2025, before they start growing again. So it does have that cyclicality. Now, from a standpoint of adding weekly closing stock prices to the graph, I want you to note that prices, as always, end up tracking earnings in the long run. But in this case, there's a lot of volatility involved in between. So you get periods where they had a long streak of earnings growth here, and you had a nice long period of stock price appreciation. Then we kind of ran into some choppy earnings, and we saw a lot of up and down volatility here. Then again, we started seeing earnings growth, and the market got excited again, and the stock really rose before it fell again. So the point is, on this graph, from a valuation perspective, this orange line is a 15 PE on this graph, and it would represent a theoretical fair value so that you can invest in the company where you fully participate in what the company produces as a business. Now, the market has generally priced this. Now, during the Great Recession era, that was undervalued below what the orange line, which represents fair value. But coming out of the Great Recession, the market kind of had a penchant of putting a premium valuation on a stock. So that's something to consider. Looking at it from a standpoint of going forward, analysts expect, again, a flat year this year, just slightly over 1% growth. Then they expect double-digit growth in 26. And I do want you to note that the analyst estimates have been falling on this company. That's another cautionary 12. The analyst scorecard is pretty decent on the 1 year, really good on the 2 year, with margins of safety at 10 and 20%. So I would consider this one still too pricey for me, but some of you who are willing to play it might want to take a look at AOS Smith. It's really a great company. It has very little debt, less than 10% debt. It offers a 2% dividend yield, 2.1%. Its earnings yield is 5.78%, under 6%. I like to see over 6.5 to 7 actually, which is a 15 PE before I become interested. But anyway, that's the FastGraph 2-minute drill, which is just a short video just introducing the stock on the company AOS Smith & Company. Thanks for watching. I hope you enjoyed the video. If you did, give me a like, ring the bell, subscribe to our YouTube channel, and subscribe to FastGraphs. It's the value investor's best friend. It provides so many insights on the proper time to buy, sell, or hold a good stock over the years. So thanks for watching, and look forward to talking to you again soon.